President Cyril Ramaphosa says he is working hard to ensure SA-born billionaire Elon Musk's affection for and connection with the country of his birth is restored. In a televised interview, the head of state commented that while discussions on specific investments were still at an embryonic stage, he hoped for measurable progress soon in the telecoms and vehicle sectors. Ramaphosa says that while some may call it a bromance, the relationship can center on investment. He has identified Musk as a top-layer business person and so would like to get him more interested in South Africa. Motorists are set for some relief at the pumps. According to the AA, major fuel price cuts are on the cards for October. It says data from the Central Energy Fund points to significant reductions across the board, which would mark the fifth consecutive decrease this year. Petrol is expected to cost just over R1 less, while diesel prices could drop by up to R1.12. The official fuel pricing announcement is expected to take place next Monday. The JSE has touched another record high. The all-share index surged to an intraday record of 87,061 points during today's session and closed higher. That's as market participants take comfort from the announcement of a stimulus package in China and an interest rate cut in the US. Old Mutual has reported a solid performance at the halfway stage. The financial services group has posted a 7% rise in adjusted headline earnings per share. That's thanks in part to a 1.5 billion rand share buyback it executed in 2023. Headline earnings, which include the results of Zimbabwe, are up 34%. An interim dividend of 34 cents per share has been declared. Looking ahead, CEO Ian Williamson says plans to launch the group's bank are progressing very well, and the move is set to shake up the status quo. The bank is due to be launched to the public in the first quarter of next year. Met has dipped into the red. The battery and vehicle component maker has posted an interim headline loss per share of 3 cents. That's from earnings of 41 cents a year ago. A significant increase in net interest costs is partly to blame, while the application of hyperinflation accounting on the earnings of Mutlu has also had an impact. But Mete is positive about its prospects. That's as it looks to dispose of Mutlu. That move will eliminate the effects of hyperinflation and high interest rates and create improved visibility for shareholders of the group's underlying business. Tough trading conditions have taken their toll on Barloworld. The industrial group says revenue for the 11 months to end August fell 7.4%, while earnings before interest, tax, depreciation and amortization dropped 14.3%. The firm will release a trading statement once there is a reasonable degree of certainty around the group's financial results, and Barloworld plans to open its books on the 25th of November. Emira Property Fund has reported a steady performance across its commercial portfolio. That's despite slight increases in vacancies due to property disposals. The fund's total vacancy rate rose marginally to 4.3% in the 5 months to end August, while the group disposed of 6 properties during the period. The commercial portfolio has largely performed in line with expectations, with tenant retention standing at 87% for leases that matured. Nepi Rockcastle says demand for its green corporate bond book build was very strong. That's as its oversubscribed book peaked over 3 billion euros. Commenting on the outcome, CFO Eliza Prideaux stated that such a market demand demonstrates both a consistent support for the firm's environmental and growth commitment, as well as a good understanding and appreciation of Nepi's achievements and results. And HSBC is exiting South Africa. The move will see the bank transfer its clients and banking assets and liabilities to First Rand and Absa. This should happen by the last quarter of 2025. HSBC is the second major multinational bank to exit SA in the past 6 months. BNP Paribas in March wound down its corporate and investment banking services in the country. Further afield, 3 top technical leaders at OpenAI have quit. This is the latest in a string of executive departures this year and coming at a time of flux for the ChatGPT maker. Here's more detail in this package report.
OpenAI is headed for a big shake-up, including an end to its non-profit status. 3 top technical leaders at the ChatGPT maker quit Wednesday. Chief Technology Officer Meera Murati was among them. She was often the public face of the startup, alongside Chief Executive Sam Altman. It's just the latest in a string of departures during a tumultuous year. Earlier Wednesday, Reuters reported that the AI company planned to drop its non-profit status. Instead, it will restructure as a for-profit benefit corporation, and that move will see Altman get a big equity stake. Right now, OpenAI does have a for-profit wing, but it's controlled by the non-profit board, an unusual setup that has led to turbulence. In November last year, Altman was ousted by the board over a loss of trust, only to be reinstated 5 days later. OpenAI is also now in the middle of a big new fundraising round. It aims to secure $6.5 billion in new investment and will see the company valued at around $150 billion. But the round is contingent on the restructuring going through, and it's not clear if the executive departures could have a bearing on the outcome. Earlier this year, chief scientist and co-founder Ilya Sutskever was among those to leave OpenAI, going on to launch his own startup. Fellow co-founder John Schulman then left to join rival AI outfit Anthropic.
And H&M has scrapped its earnings margin target for 2024. This as high discounting costs and fierce competition hurt operating profit in the third quarter. More detail in this package report.
H&M has ditched its earnings margin targets for the year. That's after higher discounting and costs hurt operating profit in the third quarter, along with fierce competition from Spain's Zara, its bigger rival, and Chinese cut-price retailer Shein. Shares in the Swedish fast fashion company tumbled as much as 8% on Thursday morning before recovering some ground. Weaker consumer demand amid high inflation has caused H&M to struggle with profitability. It said that costs around shutting down online outlet Afound hurt income too, along with currency movements and the cost of markdowns increasing over the quarter. CEO Daniel Erver said he estimated the year's operating margin to be, quote, lower than 10%. H&M did warn in June that factors including material costs made the 2024 target harder to reach. But scrapping the goal entirely with no new margin guidance puts more pressure on Erver to turn the brand around. H&M has been on a marketing blitz, hosting a London Fashion Week event with pop star Charli XCX. Erver said that he believes this investment in elevating the brand would ultimately boost sales and profitability. H&M's operating margin for the first 3 quarters was 7.4%, with a third quarter margin of 5.9%. The last time H&M produced a double-digit operating margin was in 2017.